Hello guys, my name is Billy FS, and in this video I am going to show you something that is going to be a game changer to your trading journey, only if you pay attention of course. So let's get straight into it. Now it goes like this. We are going to build everything around this theory. If a candle closes bearish, the next candle is also going to close bearish. And if a candle closes bullish, the next candle is also going to close what? Bullish. Assuming that those candles that you're talking about is of course on the higher time frame, right? We use the higher time frame because with that we can what? We can use the price action from the lower time frame to confirm what is happening on the higher time frame. Okay. So why am I saying that if a candle closes bearish, the next candle is going to close bearish? Now, assuming that this is on the daily time frame, then we have this candle what closing bearish, right? On the daily time frame, this candle closing bearish is going to be market structure on the lower time frame. It's going to be lower lows, something like this, on let's say the 50 minutes time frame or the 30 minutes time frame, right? So if the market is making lower lows on a 50 minutes time frame, why would you want to buy? Why would you see something like this and want to buy, right? You sell when the market is selling. Since the market is selling, you what? You also sell. So since this candle has closed bearish and has caused this bearish market structure, we also look to what? Look to continue the sell, waiting for the next candle to open and what? And also sell. Okay? It's very simple. It's not supposed to be complicated, right? We shall go into details, but first we need to understand these simple things. So let me copy this. Okay. So if a candle closes bearish, so assuming that for this bearish candle that closed, this is the market structure. Sorry, this is the market structure. So we are waiting for what this candle to also start so that it can continue with the market structure that the previous candle was started, like that. Okay. So this the first market structure. This one is for the first bearish candle. This one is for the second what bearish candle. So you need to wait for this candle to close for you to confirm that it's a bearish candle. Because if it has not closed and you assume that it's a bearish candle, then there's going to be a problem. Because sometimes the market is going to trade bearish, then it's going to flip from bearish to what bullish instantly within the last minute of the what of the formation of the candle. So you have to be extremely careful. Now let's move on to the bullish scenario. If the candle closes bullish, anticipate the next candle to be what? To be also bullish. Okay, so if you have a bullish candle like this on the daily time frame, when you go to the 50 minutes time frame, for instance, you are going to have higher highs, higher lows. Okay, so assuming that these higher highs and higher lows is for this candle that is sitting right here, why would you want to sell seeing something like this on the lower time frame? Okay, when you see something like this, you simply want to what? Want to buy. So what do? You wait for this candle to what? Close. Then you wait for the next daily candle to what? To start, so that you anticipate that that daily candle is going to what? Continue with the bullish structure that this one is what? Forming. Then you do what? You buy. Okay, it's very simple. It's not supposed to be what? Difficult. Now, that is very simple. Now let's look at the next scenario, because it is not always going to be the case that we have a bullish candle, then the next candle is going to be what? Is going to be bullish instantly. Sometimes you can have what? You can have some weird market structure what formation. Now assuming that we have this candle closing what? Closing bullish, we anticipate the next candle to be what? To be bullish. But instead of closing bullish, we take a stop loss. Okay. Then maybe the next candle close what? Close bearish, right? Now pay attention to how the next candle close. It closed bearish though, but it's still within what? This bullish candle. So it means that we are still bullish, right? So if the candle closes bearish and is still within the range of a bullish candle, it means that we are still what? We are still bullish and we can still what? We can still buy. So one thing that can happen here is that the next candle can also close what? Can also close bearish. The next candle can also close what? Bearish. So we get to the end of the candle most of the time to some kind of what? Lower time frame demand. Then we what? We buy. So it goes like this. Then we buy. Right? Why are we buying? We are buying because we are still within the range of what? This bullish candle. Yeah. But somebody can argue that, but you said that if a candle closes bearish, the next candle is going to close bearish. Yes, I said that, but I'm also saying that if that candle is still within the range of the bullish candle, take the bullish candle into consideration. This is what we call an inside bar. right? If you did your homework on technical analysis, you see that this is what you call what an inside bar. And inside bars, something like this, they assume that the market is going to what keep buying, right? Because the bulls are what are still active. The bears have not been able to what trade away from the what from the bulls, right? Or supply has not been able to trade away from the what from the demand. We can have something like this. Sometimes too, the market is going to what is going to break it, retest it, and keep on what moving down. But that is just for another video. But for this video, let's just focus on these two things because that is going to make it very easy for us to what understand. Okay, now let's get into the core of the strategy. Now that you understand something like this, how do you enter, right? How and where do you what enter? Or when do you enter? That is the most important part. So let's say that this is a daily candle, then you close what? You close bullish. You need to wait for this daily candle to what? To close. You don't have to be anxious, right? Trying to trade this daily candle. Wait for the daily candle to what? Close. Then wait for the next daily candle to what? To start trading. Most of the time it's going to move down a little bit like a bearish candle, then it's going to what? Going to go bullish, leaving behind what? A wick. Okay, so this week is where you are trying to what get in. You are trying to figure out where the market is going to trade to. Okay, you're trying to figure out where the market is going to trade to so that we take what we take some buys away from what this area. Hope that is very very clear. It's not supposed to be difficult. Let's look at an example with Nasdaq or probably gold. You can do this on the daily time frame, the 4-hour time frame, but I recommend you start from the what? The daily time frame or the weekly time frame. If it is weekends, start from the weekly time frame. If it is daily, start from the what? Start from the daily time frame. All right. Let's start analyzing the market from here, right? Just using candlestick. Now look at how the previous candle closed. The current candle right now is what? Is bullish, but it's still trading within the range of what? This bearish candle. So let's mark the high of that what? That bearish candle. What did I say? If the candle closes bullish, the next candle is going to go what? Is going to go bullish. But if it's still within the range of the previous candle, then you're going to take the previous candle into what? Into consideration. The previous candle is what? Is bearish. So you're going to take the bearish candle into what? Into consideration. So I'm going to mark that bearish candle. I want to know where it starts, right? So the next day can trade bullish a bit, then what? We can take sales from there. So let's move on to the lower time frame. Now this is where your technical analysis have to be very good, how to find the order blocks and the breakout blocks. That's very, very important. If you don't know how to do that, I already have a video on the channel. I will leave a link in the video so that you can click on it and check it out later on and get a better understanding on where you're supposed to what enter the market. Okay. Now this is another block. Okay. This is another block. This is another block. This is another other block over here. But most of the time I focus on extreme because the ones within the range are most of the time used as what? Liquidity. Okay. So this is another block. Right. So what did I say? We are looking to sell. Why are we looking to sell? Because you are still the range within the range of the what? The bearish candle. That is why you want to what? You want to sell from here to what? Here. But you on a 4-hour time frame, you cannot take a direct sell from here unless you do what? You move on to the 15 minutes time frame, then you look forward a change of character or something. Okay. So you look at how the candles that are moving into the zone are also what forming so that you can what? You can capitalize on that if you want to. So let's look at the most current candle. Always look at the current candles, okay? Look at the fact that this candle over here has closed what's bearish, but it's still within what the bullish candle. If the candle closes bearish, we anticipate the next candle to close bearish, but if it's within the range of the previous candle, then we take the previous candle into what? Into consideration. What is the range of the previous candle? This one over here is a bullish candle. So it means that irrespective of the fact that this candle has closed bearish, we still want to buy. Why? Because we are within what? This bullish candle, right? We buy until we reach this big area over here because at that point we know that on the daily time frame we might sell. So we do what? We wait at this what? At this level. But since we have not gotten to this area that is sitting right here, that is where we can capitalize on this one and what? Buy. So that when we get to there, daily time frame zone. You can wait for a market structure shift, wait for a pullback, then what? Be sure to the downside there. Okay, so we move on to the lower time frame. You want a 4 hour time frame, which is still considered a higher time frame. Move on to the lower time frame, 1 hour time frame to see what is happening within this range. Okay, so move on to the 2 hour time frame, probably the 1 hour time frame because I want to see what market structure, 30 minutes time frame, then a 15 minutes what time frame. Okay, so can we see what is actually happening over here? You can see the market is what is making higher highs. It has not what shifted. It looks like it has shifted over here. Like this one is a break of structure. It looks like it has shifted over here. But look at what's happening. We are within the range of what that bullish candle. So this is not a shift. This is an internal structure shift, not a rare market structure shift. This is an internal structure shift, right? Why am I calling it a shift? Because it came, then it broke what? It broke this low, right? So it was like this. Then instead of making another high, it came, then it broke what? It broke the low that it has made previously. So that is what people call market pressure shift, change of character, if you are familiar with smart money concept or ICT, right? So people may call this market structure shift, but we understand that because we are still within the range of what the bullish candle, we are not what? We are not buying. Okay, so this is the low of the bullish candle. Or we are not selling, rather. This is the low of the bullish candle. Can't find that. I cannot find the low that I've marked. Let me just use a horizontal line. Yeah, I think this will be very visible in a 50 minutes time frame. Yeah. Okay. So now that we have this, what do? We mark the order blocks and the breakout blocks and this kind of stuff. Right. Like I said, if you don't understand the order blocks and the breakout blocks, I'll leave our video in the link, right? A pop-up link so that you can click on it and check out the order blocks and the breakout blocks. So we buy. Okay. So here can be a long for you. Here can be a long for you. Then you target the what? The area of sellers on the what? On the higher time frame, because we know that the market can sell from here, because everything that we are doing, we are still within the range of the what? The daily candle. We are still within the range of the daily candle. So we can still what? We can still sell. So we don't want to what? We don't want to be delusional and assume that the market is going to come all the way here. Yes, it can happen, of course. It does happen sometimes, but this is the most realistic target for you to what? For you to set for yourself. If you take a stop loss, you reevaluate everything, reanalyze everything, then you go with the right direction of the what? Of the market. So guys, this is something very simple that I believe that everybody can do. I don't want to make this video so long, so I'm going to keep it here. But there's more to this. There's literally more to this because sometimes you can't only take those things into consideration. There are a lot of stuff like fair value gap, support and resistance, the sessions, right? How the candle closed and how the broker candles are different from each other, right? Because if you're looking at some broker like maybe IC market and another broker like maybe SNS, their 4 hour candles are going to be what? Are going to close different. So how do you go about that? Right. So a lot of things come into consideration towards to build this strategy into a very profitable what edge. So if you have any questions, leave it in the comment section once again, and I'm coming what attend to you. Billy FS out.